why don't we get started, and want to welcome everyone. This is our quarterly financial planning webinar. We have a focus on property and casualty insurance this time around. One of those things that we all take for granted, but in a changing world with real estate prices going crazy and building costs changing materially, we thought it'd be a good idea to check in on some of these kinds of issues. We are in the habit of giving you two quarterly webinars. One is on financial planning topics. The other is on economic and market updates. This is our quarterly installment on the financial planning subject matter. I'm Chris Boyd, the firm's leader, founder. I'm glad to have you with us. I want to remind you that we are recording our webinar today, and that if you are staying with us and if you happen to ask a question, it implies your consent. Your participation implies consent. As a matter of compliance issues, I will mention we have a longer page to share with you at the end of our program, where we'll share some of the compliance language, but do keep in mind that information is derived from sources thought to be reliable, and that opinions are subject to change. And as a consequence, I'll remind you today is June 8th of 2022. Joining us during our presentation today, we're going to have some great participants, the speakers. I'm going to have Doug McDonald, who is the president and CEO of McDonald Insurance. They've just celebrated their 50th year, their 50th anniversary of being in business, a testament to the quality of the services they provide. Doug is a professional with various designations. He has the Chartered Property and Casualty underwriter. He is a certified insurance counselor and a certified risk manager. He has many years of experience and will be a great resource for you as we get going in here. And as an aside, I've been getting to know Doug over the last year or two, and he's certainly an outstanding individual as well. Marie Stevenson is a great client of ours as well, and she is in her retirement and is going to share some thoughts about how you might consider the way you leave your legacy to your client, to your family members. And Marie is very much engaged in the Mashpee community, leading the Inclusion and Diversity Committee. Certainly worthwhile and important cause in our community. So this is our plan. We'll talk a little bit about some updates from AMR. We will talk about property and casualty, some lessons and things for you to consider, and what Maria is referring to as skiing, spending your kid's inheritance. You'll learn more about that, and I think you'll enjoy it. Let me jump right in and just remember to share with you initially that it was over a year ago that Schwab acquired TD Ameritrade and its companies. TD Ameritrade Institutional is the brokerage platform that we use at Asset Management Resources for when we work with our clients in their portfolio management. And as a consequence, it's something I wanted to touch base with you on. This is not anything that has had any meaningful impact on your experience through your brokerage accounts thus far, but it is something that is in the works, where there's going to be an integration with TD and Schwab. And there's not likely to be any change that's required of clients when it comes to, there's no paperwork to move your account or anything like that. But there will be some things happening behind the scenes. And we've just started to enter that period this year, the back end of this year, where we'll start to have some communications from TD Ameritrade about this transition. Much of it will be probably between them and us at this stage. And as we get into next year, we'll start to see the actual implementation of these changes. Now, I have been told that it should feel seamless to clients. There should not be any disruption in cash flows when it comes to move money activity, when it comes to trading implementation. It should feel seamless. There is a chance, I think the likelihood, that when this all happens, your account number will change, but that may be about the extent of it if all goes as planned. So in any case, we're very attentive to this. I know clients have expressed interest in keeping up to date. We just wanted to remind you that this is in the works. And at this point, we don't expect anything that should be meaningfully disruptive. There have been the start of some changes. People who have retirement plans have seen they're changing the form from the prior used document that was the TD Ameritrade document, things like that. But we'll start to see some of these changes in the coming weeks and months, really probably over the next year. So in any case, we'll keep you informed, but if you have any questions, don't hesitate to reach out to us about that. Additionally, one of the things that we're undertaking here at our office at the Asset Management Resources, we're updating our contracts. Largely, our contracts are the same as what they've been, maybe look a little different in terms of the visual structure. But the primary reason we're undertaking this update is to add the opportunity for you to include a trusted contact information. So right now, if anything were to happen to you, we weren't able to reach you, if we had concerns about your cognition, there's no authorization for us to reach out to anybody. So we're asking you, who would you like us to have as a backup if ever we needed to reach somebody? The terms of the contract, when it comes to fees and things like that, there's no intention to change anything as it relates to that. So otherwise, it's largely consistent with what we've had previously. So how we'll go about doing this, we will be sending you emails. We're only doing these a few at a time so we can track them and make sure things are being done effectively. So this will be done over a period of months, and you will probably receive an email with a DocuSign link to go ahead and review the document and digitally sign it. If we don't have your email on file, number one, perhaps you'd like to share it with us, send us a communication. If you want to email us, you can, probably best way is to email Kristen, Kristen, at amrfinancial.com or client services at amrfinancial.com. And then let us know your email address. And otherwise we'll send you a communication by U.S. Postal Service, and we'll send you a hard copy of this. And of course, if you ever wanted a printed copy, we certainly can provide that to you as well. But it's certainly more efficient to try to do this electronically when possible. Just as an aside, an additional thought, as we were talking about the transition with TD Ameritrade and Schwab, I was told that if you don't have an advisor, the client advisor page, the link to TD Ameritrade, if you haven't set up your online access, it might be desirable to do that in advance of the transition. So if you don't have access to TD Ameritrade, you may want to arrange that sometime soon. In any case, one other housekeeping thought I want to remember, we have a little note here. Annually, we do like to ask you for your tax return. It is that time of year where most people have completed their taxes. And we find it helpful to keep tabs on what's going on. If you have the AMR client web portal, probably the best thing to do is to upload your tax return, the PDF file, into your client web portal. It is secure, it's encrypted, it's a safe way to do it. Don't send it by email, certainly, because it has social security numbers and things of that sort. But if you can, send us a copy, or plan for us to scan it for you, or upload it to the web portal. All of those would be helpful. There are things on your tax return that we like to pay attention to, not the least of which is how, if you're paying a lot in taxes because of our activities, we like to keep tabs on that. But also there can be some things related to embedded capital losses, or things of that sort that get carried over, and we like to be attuned to those issues. Next, wanted to remind everyone that, clearly it's been a volatile market this year, and it's been stressful for our clients, no question. All investors have felt the effects of a volatile stock market and a challenging bond market simultaneously. We've tried to provide you several communications in a variety of ways on this. Most recently, about a month ago, we sent out a communication quite detailed in trying to address a variety of concerns. If you haven't seen that email, it is available through the website. Kathy, just to remind me, it's right there. It's on the resources section where we have AMR perspectives. You can find past newsletters and things available to you there. So do check that out if you haven't seen it. And if you have concerns or questions, always reach out to us as well. But we try to provide you resources. And to address some of those resources, I've asked Kathy Ingersoll, our marketing director, to share a little bit about some of the many ways we're trying to keep our clients informed and in communication with our thinking as things are evolving and changing over time. Kathy?
Great, thank you, Chris. We do have a number of ways we communicate with you, our clients, and I'm gonna start actually with the fourth item down on this chart, because Chris had referenced that we do two types of webinars quarterly. We put together this webinar, the financial planning webinar, which is meant to talk about considerations that you might have in preparing for retirement, preparing your financial plans and whatnot. And we often have expert guests come on, like Doug and Marie, to share their experiences and their knowledge with you, our clients. And those webinars are quarterly. We also have a quarterly economic and market update webinar where Chris and Brian is our Chief Investment Officer, they talk about the performance of the portfolio for the prior quarter and also the strategy that will be deployed for the current quarter. So those are always very popular. Moving kind of up on the chart then is we have two newsletters that we also put out quarterly. One of them is the Investor Insights newsletter, and that newsletter is a recap of the Economic and Market Update webinar. So it's more concise, and it shares kind of the highlights from the webinar. That newsletter is, as I said, it's quarterly. We put it in your quarterly statement, and we also email it. And as Chris said, all of these resources are on our website, amrfinancial.com. We also do another quarterly newsletter, which is less investment focused. It's more other financial planning topics and just things that might be housekeeping things, might be things that are happening here at AMR, and that is called Resources Review. And we will typically email that out to you. And again, it is on our website as well. And then we send one-off emails as needed. So we will send emails notifying you about these webinars that are coming up. We will send the newsletters out via email. There will be one-off emails that we might do from time to time if there's something important happening with the financial markets that we think you should know about, such as the email that Chris just referenced, and other types of things that we think you would find of value. So, and then last but not least, we also send statements out. So we've sent the AMR statement out quarterly through the mail, and it is also available on the AMR client web portal. And then the TD Ameritrade statement is monthly, and that is available through your TD Ameritrade advisor client portal. But all in all, I just went back out of curiosity for myself, went back and counted up how many communications we proactively have sent out to clients so far in 2022, and it's approximately 23. So, you know, we do our best to keep you informed. And if you are not receiving these communications from us via email and you would like to, please make sure to subscribe to our email list. You can either do that on amrfinancial.com. You can call us at 866-771-8901, or you can email us at clientservices@amrfinancial.com. We also have some more broad-based communications that we do. These aren't specific to client, they're just general communications that we do, available to anyone. And hopefully you all listen regularly to our radio program, and our which we also put out as a podcast, Something More with Chris Boyd. We air on Saturdays from 3 to 5 on WXTK News Radio 95 FM. And you can also access the radio program. If you're out of area, you can access it and live stream it on the iHeart app. And then we put the radio program out as a podcast on Mondays and Wednesdays. So you can access that pretty much on any podcast channel that you might be favorable towards. And the radio program, we talk a lot about investing, financial planning, but we also talk about quality of life issues that Chris likes to say, make the money matters matter. So I think you'd find it informative if you haven't been listening, and if you are listening, we thank you for continuing with that. And then we do have social media platforms. We have AMR, where we're sharing financial information and information about things that are happening in the office. Check us out there on Facebook, Instagram, LinkedIn, Twitter. We also have social media platforms for Something More with Chris Boyd to advise people about who our guests will be on the radio program and what we plan to talk about, and notify them when our podcasts are published and available to listen to. And then we've got 3 YouTube channels. We've got the AMR Financial, we've got the quarterly market report where we put our webinars. So if people want to go back to YouTube and view our webinars, they can go there. And then we've got Something More with Chris Boyd, where we also put the radio show. So lots of ways that we're communicating. And then our website is kind of the general place where we put everything. So you can go back and click through to hear prior radio shows. We've got a page with all of our prior webinars, all of our email communications, newsletters, whatnot. You should be able to find it on our website, amrfinancial.com. But most important, before I wrap up, is we are communicating based upon what you would like to hear from us. So if you like what we're sending, let us know. If there is additional information that you'd like to hear about from us, let us know that as well, because we really do put all these communications together for the benefit of our clients. So thank you, Chris.
Great job, Kathy. Thank you so much. And thanks for all you're doing to make there's a lot of things happening there. Great job. I wanted to take a moment to remind our clients, you know, that we've tried to build a great team to help serve your needs. And there's a variety of ways. I mean, Kathy just illustrated all we're doing in marketing, and that's really not all we're doing on marketing, but that is a big piece of the kind of things that our marketing endeavors include. And we think about marketing as inclusive to client communications as well as outreach for new clientele. In any case, but we also have a variety of expertise in various areas that our team members are helping to serve you. And I just thought it might be worth reminding everyone just briefly before we move into our guest presenters. And just before I conclude with this, if along the way you have an interest in asking a question, there's a Q&A button on your screen. That's a great way to post a question, and we can get to it when we get to the question and answer section after each comment, each presenter offers comments. If during the presentation there's a desire to ask a question verbally, you think it's relevant to what's happening right then, you can raise your hand as well, and we'll be sure to try to give you a chance to get your question addressed. In addition to myself, I think it's important that clients know, when it comes to the portfolio services, we have Brian Regan, our Chief Investment Officer, just daily paying attention to what's happening in the markets and our various investments that our clients have and the trading that is required that goes on in the portfolios. He's very attentive to our portfolios day in, day out. When it comes to our financial planning, Scott Birmingham is our lead financial planner, and he does a lot of the preparations when we do modeling of projections and evaluation, things like, should I do a Roth conversion or other, challenging questions people might have when it comes to their financial planning. He's also our firm's chief compliance officer. Kristen, my wife, Kristen, who you all probably know, she also is registered as a investment advisory representative, but she's the first person you talk to when you call or come in, and she juggles a lot of parts of what's going on. Our director of client service and office management, she's the thoughtful person who remembers key dates and important events, and but she also does a lot of the logistics behind the scenes, or when people have new accounts or some of the details of onboarding and a variety of other things. So some behind the scenes aspects of our office management, our one person HR department. So in addition, we have Jeff Perry, Jeff Tamaning, and Mike Perna, all advisory representatives of our firm. You probably deal with some or one of these people or myself, but all of us are here to serve your needs when it comes to your financial planning and portfolio management. We can be a resource to you. Teresa is an assistant to both Scott and Kristen in a variety of ways. The compliance requirements of a firm like ours, which is, naturally a highly regulated firm, it can be demanding. So she's a great resource when it comes to that. And then as far as, we just talked to Kathy and her associate Armin, it helps with a lot of the social media and radio production. So in any case, we got a great team, and just wanted to remind you that, if I happen to be in a meeting, there are plenty of other people who can be a resource to help you as we get through, volatile markets, and you may have questions along the way. All right, with that, let's pause for a moment to see if there's any questions. I don't see anything where anyone's hand is raised or the Q&A has been submitted. So let's continue on. I want to bring in our guest presenter, Doug McDonald. Doug is a great resource when it comes to property and casualty issues, having spent his career in this area of the financial industry. And I think you're going to enjoy hearing from him. As I mentioned before, what was on my mind originally was, the cost of housing has gone up dramatically. The cost of when it comes to building materials have gone up. It's the time of year when people have boats and I just thought there's a whole host of things that might be considerations that maybe we should have someone who's an expert in this area to kind of give us some food for thought on things we might be overlooking when it comes to our property and casualty considerations. So Doug, thanks for being here.
Well, Chris, thanks for having me. I appreciate it. You know, one of the tenets of risk management is in financial risk management as well, is don't risk a lot for a little. And a lot of times when it comes to people's homeowners or their automobile or the watercraft or recreational vehicles, sometimes unknowingly they put themselves at risk and put their livelihood or their assets at risk without even thinking about it. And I thought it was appropriate to talk at a high level about some of the things that we're seeing, some of the trends that are out there, and bring it to your attention to at least consider. And if anybody does have any questions, or Chris, you have a question as you go along, feel free to stop me and ask. So
Thanks.
I wanted to be brief and just touch upon what I would say are some of the important things that we're seeing out here. And the first thing I put down here is we talk about cars, but in putting them in children's names, it's something that people come into our office a lot and they don't really think about it. And they have a child going off to college, or it could be a grandchild, and they buy another vehicle for them to operate, and they put it in the parent or the grandparent's name.
Mm-hmm.
Because they bought the car, they own it. And in my thinking, I don't know what the value of the car is, to buy them a brand new one or a used one, but the car is incidental in terms of what the damage it can do. We had a sad case. It wasn't our agency, but somebody that we knew of, where the grandparent allowed the child to have a car that they own, and they put it in the grandparent's name. Cost the grandparents the insurance to go up quite a bit. So they wanted to save money. They took the child off the vehicle, but continued to let the child drive the car. Child subsequently got into an accident, killing somebody, and there was no coverage in force. And the person that owned the vehicle was the grandparent, and the judgment ended up being around $6 million.
Oh, geez.
That grandparent ended up going bankrupt. And so when we talk about vehicles and getting something for the child, our first recommendation is, don't risk a lot for a little. Put the vehicle in the child's name. Get appropriate amount of insurance. We've all been children before getting our license, and we're probably not the most careful drivers out there. And sometimes we may let a friend borrow our car or something. Remove that liability exposure. There's something we refer to as a gap analysis when it comes to property and casualty. And I encourage people to talk to your insurance agent. Ask them to do a review for you, review your exposures, and see if there's any gaps that are out there. You'd be surprised. A lot of times on an automobile policy, I'll find that people have not looked at it in a very long time, or maybe they went online and bought it from an online company like the one that is a lizard. They have funny commercials, but they're not really looking at protecting your assets as much as giving you a cheap price. And so things like property damage, if you're driving your car, you can get into an accident, you might hit an expensive vehicle out there. There's a lot of vehicles that are in the 6-digit realm, including a commercial truck that could be filled with all sorts of electronics that could be worth $1 million. And you may only have $50,000 of property damage coverage on your auto. This is something you want to make sure you have an adequate limit on your property damage. Same thing for bodily injury, making sure you have property limits there. And then something that people don't think a lot about is, here's a question I have for you. If you're going for a walk or you're riding a bicycle and you read a lot about distracted drivers, the amount of accidents have gone up quite a bit, and you get hit by somebody who's a distracted driver, they do a lot of damage to you. If you wanted to have some recourse against that, does anybody know where you might get recourse for a distracted driver that hit you that might not have had any insurance, or maybe they didn't have enough insurance?
Is it your own policy? What would be the
Yeah,
answer?
most people aren't aware of that, but your automobile policy gives you a nice feature called uninsured motorist or underinsured. So if you get hit by an uninsured motorist, or you get hit by an underinsured motorist, you can go against your own automobile policy and collect damages. And it's a sad situation to think about, but there have been many people that have been financially impacted tremendously because they weren't able to work anymore, or they had to reconfigure their home because of they needed handicap access, and they have to dip into their own financial resources. So you can go and add this coverage on. You can also add it onto your personal umbrella policy. And this is something we recommend a lot, which people don't think about. A personal umbrella policy is an extra liability policy that provides you additional coverage over your automobile, your home. And so that's protecting you in the event you do bodily injury to somebody else. But what's going to protect you if somebody does bodily injury or property damage to you? That's something you need to think about. With regard to bodily injury to you or to somebody in your family, you can endorse your umbrella policy to include uninsured and underinsured motorists. And this is a very recommended coverage, and most people don't ever think about it.
Yeah, I would never have thought of that. And umbrella insurance is rather inexpensive to have, so it's something that most people really should have. But how is that done to enhance your underinsured and uninsured features? Is that something you have to ask for specifically?
Yes.
Or is it
Yes,
certain?
you have to ask for it. A lot of companies that sell umbrella policies don't provide that rider. So you may have an umbrella policy and it may not provide that rider. You have to ask your agent to make sure that they get you an umbrella policy that provides you the underinsured motorists and uninsured motorists.
Very
An
interesting.
umbrella policy is a few dollars a week. So it's really important. Here's another thing to think about. There are a lot of people that you'll see collect expensive vehicles. I'll have them call me up and say, yeah, I'm buying this car. I'm paying $150,000 for it. And it's a 1969 American muscle car or something. But it's a classic, it's in wonderful condition, and they're paying a lot of money for it. There is, in terms of, there's different types of protections. I just wanted to bring to your attention on when you're buying something that's expensive, like an automobile, you want to make sure you go over that with your agent and have the proper, there's something they refer to as actual cash value and replacement cost. You want to make sure you're able to get replacement cost coverage on your automobile. And I was just doing a little, I was looking at the image that we have there, the umbrella and the auto, and I was just thinking about if you have an expensive vehicle, just double check and see how it's insured. Is it replacement cost or is it actual cash value? So
Good point.
that's just a minor point there, but you can go ahead there. Another issue we see a lot is just in terms of trust. You find that today, a lot of lawyers, when you're going over your estate planning, are encouraging people to put some of your properties into trust. And this is something that's really important to notify your insurance agent. If the trust is not on your homeowner's policy, or it's not on your umbrella policy, you're not picking up the liability coverage. So take a moment, again, part of this gap analysis that you do with your insurance agent, go through and make sure whatever trust you have, you've notified your agent, and make sure you notify them it's in writing, whether it's an email or a letter. You sent it to them, so you have a paper trail notifying them that you have put whatever properties you have in trust and give them the name of it. So, as they say, trust is
Imagine
not
that's
normally-
probably something that's overlooked a lot, Doug. I suspect
All
a
the
lot of
time.
people are told to, fund their trust with their equity, their home, but may not think to include the insurance agent in the conversation.
all the time.
Yeah.
Another aspect, another thing that we see a lot of today is that to supplement income, people are renting out rooms in their house. And it's one thing, your homeowner policy allows you to have 2 tenants living there, but you hear more and more people are getting what they refer to the online accommodation marketplace. Those are your Airbnbs and your vacation rental by owner, your VRBO. If you're doing any of that, your homeowner policy won't cover you. And you could be putting yourself at a tremendous liability risk. So again, if you're doing any type of rental, review that with your agent. Make sure that they're aware of what you're doing. Sometimes when people go away, they might do a homeowner exchange. You hear this sometimes. Hey, I'm going over to Italy, and they're gonna use my home, and I'm gonna use their home. That's fine. Make sure your insurance agent knows and they've notified your insurance company on it. Keep in mind though, when you do that, whatever belongings a tenant has, they're not covered on your policy. So if they're using your property and they had some expensive jewelry and it disappeared or somebody stole it, it's not covered, and you need to make sure you've addressed that issue with them. So, I don't know if anybody had any questions on that.
Okay. Keep going, do you think?
Yeah, I just keep going.
All right.
I mentioned in the prior comment there, it's a business exposures. If you do have business exposure where you have somebody coming to the home, you could be a lawyer where you have a little office in the house. It could be a financial advisor. Again, that's something you want to make sure your agent knows about. There's a lot of people that are working from home today. It's one thing if you're just answering the phone and going on to webinars. It's another thing if you're inviting people over, but if you're doing any type of business exposure, notify your agent. This next part, we talk about the value of your home, and as we all know, the price of homes on Cape Cod has skyrocketed, and the cost to replace them has skyrocketed with it as well. And I venture to say that most people today who own a home on Cape Cod are probably underinsured. And the question I'd ask is, when was the last time you seriously looked at your homeowner policy? Homeowner insurance typically would build in 2 to 4% automatic increases every year in your homeowner policy. Some might even go as high as 8%. But I'll tell you, I am finding that today, when a house catches on fire or gets severely damaged, we're finding that replacement costs are coming in the $400 to $600 per square foot range. So if you have a 2,000 square foot home, you're looking at a minimum of $800,000 to 1.2 million on that. And it's always more expensive to rebuild a home, to replace a home, to remodel a home, renovate, than it is to build new. And you need to take that into consideration. Is it the factor of demolishing the old and then trying to make the new fit in with the old? And so an encouragement I have there is to take a look at what you have for coverage A. Coverage A is the standard dwelling amount of coverage. What do you have on your policy? And the simple thing to do is just, how big is your house? How many square feet is it? And then, how much coverage A do you have? You can just say, okay, if I have a $1 million home and I have 5,000 square foot home, that comes out mathematically to about $200 a square foot. More than likely, you're underinsured. And if that house catches on fire and burns to the ground, it doesn't even have to burn to the ground. You're likely not going to be able to rebuild it.
Mm.
Taken into consideration, there's demolition costs, there's architectural fees, permitting fees, engineering fees that go into the rebuild costs that people a lot of times don't take into consideration.
Doug, you had mentioned previously the idea of a gap analysis. You know, as you're talking, I'm thinking, I'm making notes. Oh, yeah, got to look at that. Got to look at that. How do people, you know, how would you recommend people do that if they wanted to contact you? What's involved in getting like a review of their own coverage to make sure they're not missing out on what they need?
Sure. Typically, when I meet with somebody, I would ask them for copies of the current insurance program that they have in force, and then we'll take that information. We'll contact the assessor's office for wherever the properties are to see what the property record card reflects, and how they have the property titled, and what they reflect for the square footage and upgrades and so forth. Here's another important thing. If you make any home improvements, make sure you have a permit pulled. Insist that the contractor is pulling the permit. Insurance companies are looking at this information now. And as far as they're concerned, if the town doesn't have it on record and you didn't do it, or it wasn't done legitimately. So when people talk about, hey, I had my roof repaired, I put a new roof on, I had the electrical panel upgraded, I did plumbing work, and if a permit wasn't pulled, you're hurting yourself. And that also impacts when you go to sell your home. Realtors are looking at the same information. So make sure that you insist that they pull a building permit on your behalf. The insurance companies are looking at it.
Yeah,
So
good point.
we look at that information. We have software available. It's called ITV's Insurance to Value. But we're not professional appraisers, but it gives us a ballpark indication in terms of valuations. We do encourage people to talk to professional appraisers, particularly if their home is of unique character. And the other thing is people accumulate a lot of collections over time, and so we'll want to, on a gap analysis, go through all of that.
Great.
Just a couple of talking points here. Watercraft, recreation vehicles. Again, you want to look at those, make sure they're on your umbrella policy. You'd be surprised how often somebody has an umbrella policy with one agent and they decide to buy a boat, and they buy the boat policy from another person, and they forget to tell their agent who wrote the umbrella that I have a boat, and so the boat is not covered on the umbrella policy. So you need to make sure that those things connect, and again, that's part of doing a review. And then in today's environment on Cape Cod, everybody more than I'm talking to right now more than likely has some sort of a windstorm deductible on your home. It could be a hurricane, a named storm, or a wind deductible. A wind deductible is least preferred. You've seen a couple of times they've reported tornadoes on the Cape. If you have a wind deductible and a tornado occurs, you're going to get hit with a deductible. If you have a hurricane deductible, it only applies if you have a hurricane. So if at all possible, when you're talking to your agent, make sure you have a hurricane or a named storm. The named storm, it has to be a storm that is the federal government has identified to their National Weather Service or the National Weather Bureau. They need to identify it as a name, not just what the media says. That makes sense?
Yeah, so instead of essentially most people have a more costly deductible when there's wind damage issues. And so you want to make sure that if you have a policy that has those kind of terms, which most do, you'd be better served with a policy that has, whether it's actually a hurricane or a named storm as the criteria for when that deductible applies. Yeah, I made a note. I'm doing this, checking it out.
Yeah, so as an example, let's say your house is worth today $1 million to replace, and they say, okay, you have a 2% windstorm deductible, that's $20,000.
Right.
And you have a northeaster come by. It's not a named storm. It's not a hurricane, but it's northeaster. And there's $15,000 of damage. Guess what? With a windstorm deductible, you have a $20,000 deductible, no coverage to pay that $15,000 claim. If you had a hurricane deductible or a named storm and the storm wasn't named, it would be subject to your regular
Your $1,000 deductible
Yeah.
or whatever it might be. Yeah. So much more manageable.
And then the issue of flood, I hear this a lot from people. I just surfaces things to think about. The private market has come into play quite a bit today, and you can get flood insurance a lot of times much more reasonably in the private market than you can through the National Flood Insurance Program. And I'll sometimes hear people say to me, "I'm not in a flood zone," and I just want to set the record straight. Everybody, if you live on Cape Cod, is in a flood zone. The entire Cape is in a flood zone. And people might say, well, I'm 150 feet above sea level. Okay. And if you get 18 inches of rain in 12 hours, guess what? You're going to have a flood at 150 feet. So flood just isn't from the ocean or from a river. It can be from a torrential downpour. And so you can get private flood insurance very affordable, and it's something to at least consider. Be aware of it. Again, don't put a lot at risk for a small amount of money.
Yeah, great point. All right. That sounds like something to investigate. I wasn't aware there was a private market for that.
It's become very huge right now, the private marketplace. It's become very large. And I thought I'd just wrap up here. I was down in Florida last week, and I was visiting two of my children. One lives in Riverview, which is next to Tampa. The other one lives in St. Petersburg. I just saw people out using all sorts of electric vehicles. And I thought, wow, this is interesting. I wonder how many of these people realize if they cause some damage right now, if they have any coverage or protection. And I just thought you'd want to know. You have electric bikes. You know, those are becoming very popular. You know, the electric assist. And there are electric scooters and electric skates and one-wheelers and all sorts of devices today that if it has a motor and a battery, you can probably propel yourself on. I was out there, I even saw a guy in an electric wakeboard by himself, controlling himself on this electric wakeboard. And so I thought, this is interesting. This is an exposure out there that your homeowner policy does not cover you. You'll see in neighborhoods, your low-speed vehicles, they call them LSVs or NEVs, neighborhood electric vehicles, but these little golf cart type,
like a golf cart, right? Yeah.
Drive around the neighborhood. If you run into somebody on any of these devices, chances are you're not going to have liability coverage on your home.
So is there a way to mitigate that risk? Does
Yes.
such a coverage exist?
Yeah, there are special products that are on the market. Your homeowner policy will cover an electric bike up to 20 miles, if it does up to 20 miles an hour, you know, by throttle, and I think 28 with assist. But I've seen some of these, you know, crossing the line and people going faster than 28 miles an hour. And I bring that to your attention. You just think, hey, look, if I get something electric, it should signal a little red flag go off for you and say, let me talk to my agent, make sure I'm covering myself. And to that point, if you're renting one of these devices, because you're in, a lot of times you now see in the city, you can go rent an electric bicycle.
Yeah.
That rental agreement basically absolves the rental agency from any responsibility. They pass that responsibility on to you, the person who's renting the equipment.
Right.
Again, the question is, where do you have your coverage? It happens a lot. People go on vacation and they rent a boat. Look at the rental agreement on the boat. There's no coverage for liability. If somebody drowns, somebody dies, you know, you think, you know, I'm a boater. If you come on my boat, I make you wear a life jacket. I boat on Cape Cod waters, and they can get pretty nasty. But you'd be amazed that you go anytime you're on a boat, just watch people, how very few of them wear life jackets. And so you think about when tragedy does strike, it happens very quickly, and things turn on you. So if you're renting a boat, you have no liability coverage on your home, on your automobile policy, on your umbrella policy. You can sometimes get it if you're a boater on your boat policy. You can get a non-load and hired watercraft policy. But again, this is one of the things you go through on a coverage checklist, and it's the same thing if you're renting a vehicle. And people don't think about this. If you don't have any personally owned vehicles, let's say you have a company car, and there's no vehicle insured in your name personally, and you go to Florida, you're on vacation, you rent a car. You get into an accident, where's your bodily injury coming? Doesn't come from your homeowner policy, doesn't come from your umbrella policy. You have no auto policy for it to follow suit. And so, again, this is just, you don't want to risk a lot for a little. You can address those things. So I put that out there. The last thing I put down is just drones. You see a lot of those out there as well. And they're getting bigger and more powerful, and it's just a matter of time before something you start seeing some. I mean, you've already seen some incidences on them, including invasion of privacy, where the drone goes up and it has a camera on, it's looking through someone's bedroom window. But you've seen drones crash, hit things. You want to just think about, how am I covering this, and again, talk to your agent about it. So those are just some of the topics I wanted to bring at a high level.
Great stuff.
Get awareness on.
Great stuff, Doug. I really appreciate it. Kathy had mentioned she was really interested in the electric vehicle stuff. I'm curious, Kathy, what'd you think? Any questions?
Well, I'll be calling Doug to get insured once I buy that electric bike.
Yeah, you sounded like you were interested in that. All right. Well, anyway, Doug, great thoughts. I mean, I think the takeaway for me is it's time to do a review. There's lots of things that we might have overlooked. Things change when it comes to certainly the costs, and there's all kinds of aspects of one's coverage needs that they might not think about. And, when we do our financial planning, we pay attention to a lot of things, but we're not expert in all things. And this may be one of those areas that people need to get some assistance from a specialist like yourself. So talk to your insurance agent, or if you need a little help, get that gap analysis from Doug himself. Doug, thanks so much for making the time.
Thank you. You folks have a nice day.
All right, very good. There weren't any questions, so I know you said you had a follow-up you had to jump for, so we'll let you go. Okay. As we turn our attention now, we want to thank Marie for being a part of our panel today. And we're going to talk a little bit about legacy, really, I think is the message of this. How you leave legacy, there's lots of different ways to think about it. But Marie, thanks for being here and sharing your notion of skiing, spending the kids' inheritance. Welcome, and let's get started with your comments.
Thank you. Okay. Yes, leave the first one on, please.
Sure.
Thank you. Yes, thank you to Kathy for setting up these slides for me, because I'm not very technologically astute here, so this is great. And thank you to Doug. That was very interesting. I took a lot of notes myself. I just want to express my thanks to Chris and Kristen, because one of the values that I feel that you have is that you look beyond just the finance issue itself, but about the quality of life. And I think that that's really, really important. How do we expend our money? And that's, to me, a real value. Just to look at the title, it says kid 'S, because I am referring to each child that you have, depending on that, maybe you have one, but however many you have. So I do want to make that emphasis. And of course, then I would also add spending your kid's inheritance for each child, and I hate to say it, before you die. And, you know, we're sitting there thinking about that, and I happen to be above the life expectancy. I'm very grateful for that for my age. So let's keep that in mind. Okay, so the next slide, thank you.
Sure.
You know, in looking at the traditional inheritance issue, I'm drawn to the story of my husband's great aunt who emigrated from Ireland from great poverty. And it was kind of like a family joke, but it really wasn't, because she would not spend a dime, and she would darn her own socks and, you know, just really deprive herself because of that value of leaving money to leaving an inheritance.
Yeah.
And when she died, she had one child, and he was a very wealthy man, an executive vice president of the company. And I can assure you that he would have loved to have his mother spend money on herself and not save it for him. He didn't need it.
Right.
And so that's something to think about. And then when you look at using money while you're alive to enjoy experiences with your children, I'll put my glasses on here so I can make sure I'm including what I want here. But so, you know, look at where you are. I'm assuming that the people here are retired. What are you satisfied with the relationships that you have with your children now? It's not intentional on their part, but when you go and see them, probably you're part of a big family get together, or there's all kinds of activities going on, and you wonder if they're really aware of who you are, and are you being heard? You know, are your experiences now very different now that you have adult children who have lives of their own? So that's something to kind of think about. Now, how you're going to deal with this will depend on your family circumstances and your personal desires. So I'm not going to, you know, say to you, you should be doing this. But I can say to you in my situation, so I hit my 80th birthday last year. I'm in my 80th year right now. I'm celebrating it all year, by the way. But, I've been a widow for a long, long time. So I'm living alone. And I have 3 grown children, all in their 50s. Okay, so they're pretty well established, and they're already looking at their retirement, right? So, so then I look at, well, what's the situation of my children, right? Well, there's one child, my oldest son, who's never lived near me since he graduated from college. I'm lucky if I see him once a year, and if I see him once a year, I am sharing attention with the grant, which I obviously value, but you know, here I am, and I'm visiting, and we have the whole family, and I don't really have, if you want to use the term, alone time anymore with my son, even less because he lives so far away in North Carolina. All right, then I have a daughter who happens to be a hospice social worker, who is working 2 jobs, single parent, you know, really struggling financially because she chose a profession which I deeply admire at serving people, right? And then I have my younger son who's going to be 50, and he's very, very busy starting a new company and whatever. So I'm looking at all of that, and obviously the 2 sons are doing, you know, pretty financially pretty well, but not so much my daughter. So these are all things that come into play when I start to thought about this. So next page, please. I have been able, and let me just say, my late husband and I were both educators. We're not wealthy. We never were wealthy in terms of the amount of money that we have. But I have been able to travel, you know, economically, because I am in a home exchange program. It's kind of interesting to hear Doug about that. But so we'll explore that later. And that's another topic, obviously, not for today. But it has allowed me to take all 8 of my grandchildren various times to Paris, to Dublin, to Munich, wherever that they want, along with their families, though. So even though I was able to do that economically through the home exchange program, So travel has been my value, and I have tried to translate that value to my grandchildren, who now range from 18 to 23. Okay, so so the reason I'm looking at this differently is that this time I want to deal with this differently. I want to deal with travel with one child, adult child, one at a time. And I want to add to you here, in my situation, yes, I am single. So in my situation, it's one parent with one child. And if you are lucky enough to have a spouse, or you know, maybe you're into a second marriage or whatever it is, I would still suggest that you limit the experience to one parent and one child, with the hopes that you have the acceptance from the spouse that is involved. Because when you add another person, it then reduces the amount of bonding that you're going to have. So that would be one thing that I would look at. And the funny thing is that when I have met people in their 50s that have adult and elderly parents, they just go, wow, I love that idea. You know, you're getting it from both ends. I have people my age that go, wow, why didn't I think of that? But you also have the 50-year-olds that's saying, wow, I would love to have that opportunity. I need to talk to my mother or father about that. So if we could look at the next slide. So some of the things I've done so far. So this was not the first trip, actually, because that had been delayed by COVID occurrence there. But I was able to take my oldest son, Rob. Remember, this is the one I don't see very often. The interesting thing is really it was his wife that set up the idea, because I mentioned, you know, because they know I travel, gee, I'd really like to go to a safari one day, just thinking about me. And she goes, oh, you have to take your son. You have to take Rob. He's always dreamed of doing that. And I don't want anything to do with it because I'm scared to death of going on a trip like that. So, and she actually, I was visiting in North Carolina, and she actually went to the next town and knew a travel agent from South Africa who specialized in that. And then she kind of pushed me in that direction. But I think that that's a really good lesson, because she cared enough about him that he would have time with me without her. And they've been married how many years? You know, this is over 25 years, 30 years. So to be able to do that, I think that's a lesson of love that the spouse can have, a willingness to give up, you know, and to allow, in a way, allow that to happen, and to encourage.
A nice suggestion. Yeah.
Second slide, please. Our next slide, please.
Sure.
Okay, so then we have Sarah. Now, Sarah's the one that's the hospice social worker. And she is one that would never, ever be able to afford to travel on her own because of the work that she does and responsibilities to her 3 children. The thing about Sarah is that when I have had people in my home from Home Exchange, she lives in the same town in Mashpee. So she was often, you know, all the time welcoming the people from other countries that came to my home and cooked for them and related to them. And as a result of that, she became friends with them and constant communication through WhatsApp and Facebook and whatever. And so the value of that was, in the end, we were their guests in Sweden and in Italy because of the connections we made. So that's another little selling point for Home Exchange programs, which I've been doing now for 24 years. So this is expanded. So here was an example, you know, a really a wonderful, wonderful trip, but made better because of relationships that we had developed over the years. Okay, so the next slide, please. So now we have my youngest son, Sean. He's going to be turning 50 this year. And so we're still celebrating the 80th birthday now. So he hasn't had his turn yet. And he has already chosen, and the choice there is an interesting point that I'm going to make afterwards. But I said, where do you want to go? And he said, I'd like to spend a little time in London, but I'd like to go to Belgium because it's the beer capital of the world. He loves beer. He's into craft beer, all of those beers. So that to him was, and I'd never been to Belgium. So isn't that exciting, you know? And yes, I've been to London, but
How do you like beer?
I don't. But that's okay.
You might learn to like it after your
I
trip.
do. It's a funny thing because when I have gone to Europe, I do drink beer. For some reason, it tastes different and I enjoy it. So I will, not to the extent that you would, you know. But yeah. So if you look at the next slide, please. These are some of my tips, and obviously, I know you probably have reference to the article that Chris got me to write, but these are some of the highlights that I could share with you, and how this all comes to be. And the first thing is to do a lot of planning. I'm already planning, obviously, have been planning for quite a while, the trip to Belgium, to London and Belgium with Sean. And then to decide, you know, well, who, you know, there is going to be some division of who pays for what. But basically, I'm taking, you know, this money and I'm paying for the flights. I'm looking for economic flights. You know, I'm paying for the lodging, but some of that is taken care of with the home exchange. But there are times when it just kind of flows very nicely. You know, I would pay for the meals or whatever, but then, you know, Rob or whoever the child is, you know, well, let me pay the Uber fee or let me pay the tip, things like that. So it just kind of works nicely without them paying a lot of money, but they want to contribute to, and that's really important. So the bulk of the expenses are mine. Okay, this is their inheritance now. So, and that's okay. So the next thing is to plan what you're comfortable with and what each child's desire is. And that's really, really important. And of course, that's where that story that I just told you came into being. Mindy says to me, Rob always wanted to go on a safari. There's the clue. Okay, Sarah, I really want to go to Italy. I really want to go to Sweden and see these friends that I've made and have been inviting me to go and I couldn't go, right? I couldn't afford it. So what are they really, you know, now I'm talking about overseas travel, but you really, so what are you comfortable with? Maybe you're not comfortable with going, you know, on a long plane. You don't want to be on a plane for 13, 14 hours to go to Africa, although it's worth it. But, you know, you could maybe do it within this country or in Canada, you know, or somewhere within your environment. Maybe it's to go to the national park in Utah or whatever, you know, whatever it is, you know, work out something that you would be willing to do, but really that is something that your child has maybe always wanted to do and never did. All right.
So it's like a shared experience is really the key.
Experience,
Yeah.
exactly. And you want to try a different experience. And the reason I say that, because I have traveled a lot. And so if Sean says, I want to go to London, I've been to London many, many times. But what I have not done, because I say to him, what would you like? Why do you want to go to London? I'd like to do the rock and roll tour. Oh, okay. I never did a rock and roll tour. Why not? He said, what about the war room, Winston Churchill's war room? I said, you know,
Yes.
I've always wanted to do that, and I didn't get around to it. So you can still do it, even if it's a place you've been, okay? So here's what I suggest, because, you know, I've always like tried to economize, you know, take flights where you stop in Iceland or you know, change planes and do all of those things. This time, no. I use now direct flights, pay a little bit more money, have private transportation to and from the destination where you're going. Make it easy on you as the elderly parent and your child, okay? So make it, you know, really, really, you know, not just economical, but easy, because in the end, you know, running through, you know, metro stations and taking cabs and things and trying to arrange that, do it ahead of time and get it all arranged. All right, so for you, I'm saying, and actually it's probably not too bad for your 50-year-old plus child, is leave some time for rest. And this is a funny story because actually Sarah got to do the trip to Italy and Sweden before Rob got to go on the safari. And he had called his sister and he said, oh, he said, Sarah, am I going to have a lot of problems here with mom? Do I have to take care of her? You know, what do I have to do? into, and this whole thing. And she's laughing, I mean, she's, she knows me, but he doesn't, right? And she says, Rob, don't worry about a thing. Just make sure she has a little nap every afternoon. And that's a point. And he ended up taking a nap too, right? Plan for your health needs and purchase travel insurance. I never used to do that when I was younger, but now I do. Make sure that you have taken care of whatever health
Just in
issues you
case.
have,
Yeah,
and have travel insurance. Especially today with all the things that are going on.
good point.
Travel light, and a lot of people don't. They don't think about that. Learn how to. Look at Rick Steve's, YouTube or whatever, and learn how to pack enough clothing in the right way, and the right shoes to use it, to be able to travel with a carry-on bag and a tote. That's it. Why is that important? Well, first
That's
of all,
impressive.
you have your child with you. Your child is with you, and they're going to be lugging your stuff sometimes, right? So you don't want to be having these big suitcases that you're going, and these are just, practical points that make everything easy, right?
And you're an expert at this, Marie, with your color coding and all the rest of it. Yeah.
I am, but it's doable. It really is doable, and a lot of people take too many shoes. Just make sure you have you wear one and you have another pair that are really easy to walk with and you've broken through,
Yeah.
Which leads to a couple of other things. And that is, use public transportation. But don't get into rental cars, particularly in a country like South Africa, where you're driving on the wrong side of, not the wrong side, the different side.
We're uncomfortable. We're not used to it.
The different side of the road. So I purposely used Uber and private transportation, and that's for also my son in this case, because I didn't want him having to worry about driving in a strange country and then go out to a nice restaurant and not be able to drink a glass of wine or whatever. Make it a pleasurable experience that you're not worrying about. So it's either public transportation, which is very available in other countries, or Uber or whatever else that you have. The other thing I would say is train physically for you now, the older person. Train physically in advance of the trip. If you think you're going to be walking up hills and with rocky roads and things like that, well, get prepared for that. Get prepared for that, because you are going to be walking a lot or climbing into, Jeeps, safari, things like that. There'll always be people to help you, but try to be in the best shape that you possibly can be. All right.
Good point.
Another point is to allow your child, remember, they're pretty much successful, they're well established. They want to contribute something special. And again, it was my 80th birthday. And allow them to do that, because that gives meaning to them and they feel like they're contributing something. So Rob found out about a Michelin star restaurant in Cape Town that is world renowned, known. And he arranged ahead of time. We have to get reservations months ahead of time. And he arranged for us to go to this Michelin star restaurant, which was just a life experience, right?
Nice.
Sarah, she arranged for us. We were changing planes in Rome from Italy to go to Sweden, an early morning flight. So she arranged for us to be in this very exclusive spa the night before. And that's where we spent our night there. And I didn't want her to spend the money, but I knew that she needed to do that. She needed to contribute. So that was another wonderful experience as well. So there are some things that I really, but the whole point is, as you see it, spending uninterrupted time with each child, exploring together and having fun. One of the things that I found was the whole issue of technology was so helpful to me, because my kids knew, what do you mean? Oh, we can just put this on the phone, Mom. We can use the GPS to walk down, to find our places. Here, let me put your vaccination card right on the phone. Oh, we need to make some plans for this particular, they can just do it like nothing. you know? So that's a real plus, you know, that it was really, really, really helpful to be able to do that. And the other thing was their perspective, you see, because Rob he designs buildings, he creates buildings in Raleigh, North Carolina area. And so he was looking at things totally different than I did. He would notice like, oh, look at that architecture, look at that design, you know? And so I was seeing things through his eyes and seeing more. Sarah's into food, you know, oh, let's try this food. Let's go shopping for this food and everything. And of course, you know, we're going to learn about beer in Belgium.
All right.
Yeah.
Let me just remind people, please, well, you conclude. Let me just remind people if they'd like to ask a question, they can use the Q&A button or raise their hand. We're just about to the end of Marie's comments.
So in terms of things that I noticed that brought me back to their childhood, and I think that this is really, really key as well, is that, you know, Rob, the older one, was a nerd. He's you know, he's an engineer. He was a nerd as a kid, you know, always. And I remember him, we'd go to New York City when he was like 9 years old, and he's taking notes on all his experiences to report back to his teacher. And there he was on this safari taking notes of every bird, every animal. And I went, whoa, you know, brings me back these fond memories of this child. The other interesting thing was Sarah. Sarah was a terrible adolescent. Either I was going to kill her or she was going to kill me. So we had this adolescent angst. And here we were years later, having none of that and having a real friendship and joy together. So you go back and think, wow, it really did get better for those of us that have grandchildren or whatever in that age group. And the other thing is that I think on the other side that I enjoyed with, you know, meeting with people and whatever. And so I think that they saw me relating to other people and in a different way. And the important thing is that they may have preconceived notions of an aging parent, which are probably not true. So they see you in a more humane and personal way and recognize your value. So I'm going to end with, I asked them for that article that we mentioned to write me a commentary on what it meant to them. Of course, we just have Ron and we have Sarah right now. And so this is a good way to close. Rob wrote, Mom took me on a legit bucket list to Africa. It was just the two of us, with friends made along the way, enjoying life and strengthening our bond. This experience etched beautiful scenes in my mind and heart that will be with me forever. I just know that when she has passed on one day, these treasures will be far more valuable to me than any monetary inheritance. Sarah writes, as someone who works in hospice care, I've learned time and time again the importance of relationships and time spent making memories with those you love. Money does not have the value of a relationship, a memory, time spent sharing, laughing, breaking bread together, and experiencing different cultures. I'm so grateful that her decision includes me in her travels, and I will never have to wish that I had spent quality time with her because it's happening now.
It's pretty special, Marie, and I appreciate you taking the time to, you know, share your experience with our clients. And, you know, Marie has mentioned in our comments that she had an article on this topic published on thestreet.com. It was published on March 28th. If you want to look up skiing, spending the kids' inheritance as a topic, you can find it through Retirement Daily on the Street. And in addition, Marie, I will mention if people want to hear more on some of your comments, may relate to much of what we talked about, but Marie's been on the radio show a couple of times as well. One on this topic on March 9th of this year, as well as January 23rd of 2020, was posted, but January 18th show, I guess it was, Marie talked about her home exchange experience, which has been a great experience for her and her ability to travel. Topic of another time, as you said, but maybe a topic to talk to Doug about before people undertake that, to find out what their coverage needs might be.
Yeah.
But I don't see any questions, but if anyone has a question, we're happy to entertain those questions for Marie. And while we wait, I'll sort of wind things down with a couple of things. If there are any questions, feel free to use the chat, the Q&A, or raise your hand. And, just as a reminder, we mentioned that we do a couple of different webinars each quarter. Usually the start of each quarter, we do something more related to the markets and what's happening in the economy, a little more geared toward the portfolio side of things, as opposed to today's presentation, which was really more around the planning. Both, I think Doug's comments were helpful on thinking about an area of exposure that we don't always think about, but Marie really talking about those quality of life considerations. So, appreciate that. But mark your calendars for the July 13th economic market update, and we'll start accepting registration on early July on amrfinancial.com. Does look like we have a question. So let me, or the comment in the Q&A. Bert had requested that you talk about passports and visas when it comes to foreign travel. Could you elaborate a little bit on what's involved in the preparations for that? And just, give them a little insight on some of those kind of things.
Well, that's just pretty easy to do, really, to get a passport, but give yourself plenty of time to, if you don't have one. I, of course, have an active one all the time. And so make sure your child has a passport as well and has taken care of that. But, you can, I think if it's your first time passport, you can actually go to a post office, I believe. But you can just Google it and you'll get directions on how to get a passport. Did not run into visa at all, but it's a good thing to check that out depending on where you're going, of course. And the key thing was at the time, because it was during COVID, I don't think it's up there anymore, but we did have to have our vaccinations updated. That was more important. And when we switched at airports, we would have to fill out forms that you don't usually have to do.
Yeah, and I would just point out the timing of COVID testing is very particular these days for when you're leaving or re-entering. You need to have your COVID test, a particular type of COVID test, and the timing of that COVID test has to be in a
with the travel agent that in Africa, because we were going from one country to another, that was really taken care of by the travel agent, in that case. And it was already scheduled and we had drivers that took us where we needed to be. But to get back into the United States, we used the self-test and we had no problem. So I bought the self-test ahead of time, this was a while ago now. And but I don't think the restrictions are quite as heavy now. Yeah.
Excellent. Marie, thanks so much. I appreciate all your time and expertise on this issue. Encourage people to check out your article and the podcast if they'd like to learn more.
And if they want to talk to me, they can go through you and
we'll happily connect you. Yeah, you're a wealth of information, right? I think the bottom line is it's great for people to give thought to how do you want to leave a legacy? Right. A legacy can take shape in many ways. It is partly about stuff and the wealth that we leave. Mm-hmm. It's also about values and in this case, relationships. So there's many ways to think about how you leave that legacy for the next generation. You've traveled with your grandchildren as well, and I think it's a good lesson for us all to give thought to as to how do we want to incorporate things like this as an opportunity to share time and values and relationships. So anyway, thanks everyone for being with us. Hope you'll join us for our next webinar. And if you have any questions in the meantime, please do not hesitate to reach out to us. We'd like to hear from you. If you have any questions about your plans, your portfolio, check us out either through the website, amrfinancial.com. You can connect with us that way. Send us an email, clientservices@amrfinancial.com, or you can give us a call, toll free 866-771-8901. All right, that's it for our program. Thanks for being with us.